Good morning. My name is Ian Joseph, market analyst, HFM, East Africa. And today is a special day, it being the 5th of September 2025. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets the right way. Now, before we do begin, we do have a promotion currently running, and this is round number 1, whereby the first 5 people are going to have a chance to win a total of 325,000 Kenyan shillings prize pool. Now, the event is time limited. Don't worry if you have not yet started, you still have time. We have 14 days, 13 hours, and counting to go. Now, it's very easy to join. You just go over to your HF platform, go to promotions, go to the first 5 and join the promotion. You only need to trade 150 lot size, either in Forex, gold, silver, or crypto, depending on the account that you're using. And once again, the first 5 traders to complete the trading requirement by 19th September will win 65,000 Kenyan shillings. Not only that, we do have another promotion currently going on. And once again, when you go to your HF website under promotions, here you are. We do have the Battle of the Elite also happening, and this one is bigger than the previous one. So you just click on read more. Let's wait for the website to load up. Now, for this one is going to run from 1st till 30th of September. Once again, round 1. Become Kenya's dawn or business. Claim the crown. Number 1 is going to walk away with some pretty decent amount of money. It's going to be 1 month. 13 winners, 13 lucky traders are going to be in the draw. We have 2 price tiers. Once again, leverage maximum is 1:400. The first person is going to walk away with $5,000, which is equivalent to 650,000 Kenyan shillings. My lord. The second person is going to take home $2,000, which is equivalent to 260,000 Kenyan shillings. And the third person, the third lucky person, is going to walk home with $1,000, which is more than 130,000 Kenyan shillings. We are also going to have a lucky draw, whereby 10 winners are going to win $200 each, 26,000 Kenyan shillings per winner. Simple. Once again, go over to your HF platform, go to promotions, open a Battle of the Elite trading account, and deposit at least $100, which is equivalent to 13,000 Kenyan shillings. Trade any asset and rank in the top 3 traders percentage-wise of profit gained. So the profit is going to be as a result of your initial deposit. Now, we do have a leaderboard currently at the moment. Joji, number 1 at 569%. Very interesting. Very, very interesting. Once again, the promotion is going to run till 30th of September this month. Purpose to trade. Now, today, once again, I want us to go back to the morning market call. Welcome all from whichever side of the country, the world you're watching me from. I want to welcome you to today's session. Now, today being the first Friday of the month, you know what it is. If you don't know what it is, then I'm here to help you. Whereby, let's start with the economic calendar. Whenever you wake up in the morning, it's always advised to look at the economic calendar. Go over to your HF website. Under tools and education, we do have the economic calendar. If you don't have an account, kindly you can register to enter into the promotion. Now, today in the morning, we did have some news releases. Let me refresh my page. Whereby at exactly 9 a.m. today in the morning, we did have the British pound releasing their retail sales, and it did come out slightly better than anticipated. The previous number was 0.3%, which was revised from 0.9. We had a consensus of 0.2%. The data actually came out better than expected at 0.6%. Now, if you look at the data, this is the data that we have just received at exactly an hour 5 minutes ago, whereby retail sales volume are estimated to have risen by 0.6% in July 2025, following an increase of 0.3% in June 2025. Now, non-store retailers and clothing stores are, just a moment. Non-store retailers and clothing stores sales volume grew strongly in July of 2025, which retailers attributed to new products, good weather, and an increase resulting from the UEFA Women's Euro 2025 tournament. Now, this data is going to look at how the retailers have been buying and selling. Now, if you look at the British pound, they do produce some pretty decent textiles and fabrics. Now, we can see as a result of the euro, we did see an increase in the retail sales, which most of the time is going to reflect into prices, because when you look at the jerseys are going to cost a pretty amount of British pounds. If they're buying the jerseys, it means that money is in circulation and it's going to reflect in prices in due time. Now, retail sales and GDP, how do they go together? Now, retail sales are used to estimate growth of the retail trade, excluding motor vehicles and motorcycles. Now, they do tend to exclude first motor vehicles and motorcycles because they tend to be volatile. Okay. There is seasonality to how people will tend to purchase vehicles. Let's say, for example, when it heads over to winter, the sale of vehicles is going to take a beating. Right now, it's we are going into autumn. Summer is just ending, and we did see an increase in the amount of retails. Let's say, for example, PMI data coming out positive than anticipated earlier this week. Now, the industry in the output measure of GDP, the retail trade industry has a GDP weight of 4.8%, meaning the data that has just been released today has a 4.8% effect on the British pound. Quite interesting, meaning that if the data does come out, you would want to look at what is happening. Now, in our GDP, first quarterly estimate, UK April to June 2025, retail trade, excluding motor vehicles and motorcycles, contributed 0.02% points of GDP quarter in the second quarter of 2025 and 0.06 percentage points in the first quarter. Following these updates, now there has been a way on how the data is being released, but at the moment, the most important thing you want to look at is the data coming out positive. That is what we would want to look at as traders. How is it going to affect prices in the near future? Now, later on in the day, which is going to be exactly noon, we do anticipate GDP numbers for the Eurozone in general. Now, this is going to be the year-on-year numbers and then the quarterly numbers. We do anticipate the quarter-on-quarter release to come out as consensus, which is almost the same as the previous number, 0.1%. And also on the year-on-year release, the previous number stands at 1.4%. We are having a consensus at 1.4%. Now, the highlight of the day, the PS de resistance is going to be non-farm payroll, the employment numbers for the United States economy. This is very interesting. Why? Because each and every Friday, the first Friday to be specific of every month, this data is usually released. Now, employment is very crucial, because if people are being employed, it means people are going to pay taxes. Money is going to be in circulation as a result of consumer spending. Now, when you look at the United States, they are built heavily on credit. Now, this credit has to be serviced. How is it serviced? It's serviced by workers. People have to be working. Now, when you're looking at the non-farm payrolls, this is how many jobs that were created in the previous month, excluding the farming industry and also the government sector. Okay, so they're going to exclude those two segments, and it's going to look at how many people were employed. Now, if you click on the HF website, when you click on the non-farm payrolls, this is the first data. We are going to have 7 news releases. Non-farm payrolls being one. We do have average weekly hours, which is going to be low impact. We have average hourly earnings, and we are going to talk about each and every one in due time. Now, starting off with the highest impact, non-farm payrolls. This represents the number of new jobs created in the US during the previous month in all non-agricultural businesses. It is released by the US Bureau of Labor Statistics, the BLS in short. The monthly changes in payrolls can be extremely volatile. The number is also subject to strong reviews, which can also trigger volatility in the Forex board. Generally speaking, a high reading is seen as bullish for the dollar, while a low reading is seen as bearish. Although previous month's reviews and unemployment rate are as relevant as the headline figure, The market's reaction therefore depends on how the market assesses all the data contained in the BLS report as a whole. Now, I want us to go back in time slightly to 1st of August, which was last month. And we have seen in this data whereby, so the 1st of August was the first Friday of the month, and I want to click on apply, whereby we did receive the non-farm payroll numbers. Now, very interesting is that the previous number was revised from 147,000 jobs down to 14,000 jobs. That is quite a revision. Now, last year we faced a dilemma in the markets whereby, as a result of the revisions, by the end of last year, nearly 1 million jobs were revised. Now, remember, this data is usually printed out and then there's a revision. Okay, so you can see the previous number, then the revision. So looking at it, the previous number was 147,000, but when they released NFP numbers on 1st of August, now the then previous number, which was June's number, was revised from 147,000 to 14,000. And actually, Trump did fire someone as a result of this revision. They were like, "What are you guys us? Someone needs to check out." Trump did fire someone as a result of this massive revision. Now, we had a consensus of 110,000. The data actually came out at 73,000 jobs. Now, in an economy of more than 300 million people, 73,000 jobs is quite alarming, especially looking at the revisions. Now, this is data. If today, you can see now the data that did come out was 73,000 jobs. I want to switch gears back to current day, which is going to be 5th of September. Now we are looking at the previous number as 73,000. Here it is. So we are looking at the previous number as 73,000. We are looking at a consensus of 75,000. So if the data does come out actually greater than 75,000, it means it's going to be good for currency. If it does come out lesser than 75,000, it means it's going to be bad for currency. We are also going to notice and pay close attention to the revisions of the previous number. Once again, last year we had massive revisions of almost 1 million jobs, and the markets interpreted this data as very negative. If today's data does come out below 100,000, this will be the first time in 4 years whereby the non-farm payrolls has actually come below 100,000 for 2 consecutive months. Once again, job employment is very critical to the United States of America. This data is going to show you how many people were created, how many jobs were created. And this is going to have an impact because, once again, if you look at the central bank, the 2 main mandates of a central bank, the first one, lights out. Whoa, the lights went out. Okay, sorry about that. I do believe I'm still on, huh? Okay, where was I? Now, looking at the job data, about the central banks, whereby the 2 main mandates of a central bank, first is to maintain full employment. So if there is an uptick into how people are losing jobs, this will be the next data that we'll want to focus on, unemployment. So we have the non-farm payrolls coming out as the high impact, first of all. Okay, then we have the average hourly earnings year-on-year release. This is also high impact expected, whereby looking at the previous number was 3.9%. Consensus is at 3.7%. Now, remember, if you look at the United States of America, they're usually paid by the hour. So this data is going to look at, are they being paid more by the hour? Let's say, for example, if the data does come out greater than the previous number, 3.9%, it means that, okay, looking at where we are currently compared to 1 year ago, because this is the year-on-year release, we anticipate that people are being paid slightly better compared to previous months a year earlier. Investors look at this information, algorithms are going to look at this information, and we are going to have volatility anticipated at that particular time. Now, we also have the average hourly earnings. This is going to be the month-on-month release. Now, we do have the year-on-year release, then the month-on-month release, and then the other type of data that we would want to pay close attention to will be the unemployment rate, whereby this is one of the data whereby the higher the data, it means the worse it is for that particular currency. Because at looking at where we are currently at the moment, the previous number was at 4.2% unemployment rate. We do anticipate the consensus is an uptick of 4.3%. The actual number has not yet come out. And sometimes the number will either come out higher or lower than anticipated, which means if it comes out lower, it's good for the economy whereby people are retaining jobs. But if it comes out higher than 4.3%, it means that, okay, people are losing jobs and the unemployment rate is going higher, which means the government is going to spend much more money in terms of supporting the economy. Taxes are going to be lesser and there's going to be a deficit in terms of how the economy is performing. Now, at the same time, we do have data from the Canadian dollar also, which they usually release their unemployment data similar time compared to the United States, whereby you do have the net change in employment, whereby we are looking at a positive number of 7.5 thousand jobs for the Canadian dollar. We do have also the unemployment rate. We also do anticipate an unemployment rate to tick up to 7% for the Canadian dollar. This is the highlight of the day. Once again, it's going to come at exactly 3:30 East African time, which is going to be lesser than 5 hours, 13 minutes as per the time of recording. We are going to be at the Nairobi garage, whereby we are going to have a live analysis session. If you are around Nairobi, purpose to attend, whereby we'll be looking at this information unfold in real time. And as a trader, how could you use this information in the near future to enable you find opportunities in the markets? Because for us traders, we anticipate volatility. If you buy, you want to see the markets move. If you sell, you will want to see the markets do move. Now, I want to switch gears to the charts, but today I'm not going to look a lot on the charts because, once again, the data is about to be released today at 3 p.m., 3:30 to be exact. And usually, before news releases, the market enters into a period of consolidation as the market waits for the data to come out. If we can go back to 1st of August, which was when the last NFP data was released. I don't believe it was here. Okay. You can see how the market entered into a period of consolidation. And then this massive bullish candlestick that we are seeing here, this was when the news was released at exactly. Now I'm looking at the 1 hour time frame, but if I go down to the 30-minute time frame, this was when the news was released. So most of the times before major news releases, the market enters into a period of ranging manner consolidation, whereby candlesticks tend to print side by side as it waits for the news release to come out, because algorithms are going to look at this information, execute on it. Investors are going to look at this information, execute on it. We traders are going to look at this information and execute on it. So when the data did come out negative last month, whereby it came out negative for the United States dollar, we did see gold rallying to the upper side, and for the next subsequent few days, prices continued moving to the upper side. For the subsequent 1, 2, 3, 4, 5 days, prices maintained above the price release before NFP. Looking at where we are currently at the moment, similar pattern could be seen in the markets, whereby the markets are currently ranging in between this region at the moment. We'll want to look at the data, how it does come out at exactly 3:30 p.m. Then we make suitable decisions. So on days like this, you will want to pay more attention to fundamental analysis. Now with the news releases, you can trade before, during, or after, depending on your trading style. Okay. Each and every one of them has their pros and cons. And once again, we are going to be at the Nairobi garage to discuss what it means if you enter a position before, during, or after for you as a trader. Looking at silver also, once again, ranging in the markets. No sense of direction currently at the moment, and the markets are going to wait for the information to come out as time goes on. Looking at the volatility, looking at the dollar index first of all, before we continue. Now the dollar index once again is ranging in between yesterday's price action, whereby we will want to see how the markets are going to react. If at all we do break those lows or the highs that was formed yesterday at exactly 6 p.m. in the evening, this could be my region of interest. waiting for prices to either break to the upper side or to the lower side. Now, looking at the volatility index, this week has been very active. We are currently trading below the opening price of Monday, I do believe so. We are currently trading below the opening price of Monday on the volatility index. The volatility index, fear and greed index. You don't trade the volatility index, but it's going to enable you find it's essentially the fear or greed index. The higher the volatility index, the more you anticipate prices to move in either direction in the near future. Now, looking at equities, starting off with US 500, equities are going to be affected heavily as a result of the non-farm payroll data. Why? Because when you look at these companies, if I look at the stock heat map, especially if I start with the stock heat map, Nvidia is up 0.61%, Apple is up 0.5%, Meta, most of the companies currently on the daily time frame are up on the Nasdaq. If you look at the S&P 500, similar instance can be seen whereby most of the assets are currently in the green. When you look at the Dow Jones Industrial Average, also the Dow Jones is up quite significant. Most of the companies are currently trading in the green. Now, when you look at this data, equities are very affected with employment, because when you look at this 500, let's say if I'm looking at the S&P 500, these are the top 500 companies in the United States of America. If the NFP data does come out negative, it shows us that, okay, people are losing jobs. Where are they losing jobs? They are losing jobs in these companies. And if they are losing jobs in these companies, you're anticipating prices of the equities to move to the downside. On the other hand, if the data does come out positive, whereby they look at, okay, jobs have been created. Where have these jobs been created? They've been created in these companies. So you anticipate the prices of these equities to continue moving further to the upper side. So once again, no one knows what's going to happen next. Absolutely no one knows how the data is going to come out. As traders, we react to these pieces of information. We will want to look at these probabilities, ask ourselves, like, could this be a good chance for me to either buy or sell in the market as a result of the data that will be released? Looking at the Nasdaq, the same thing could be saying, whereby looking at the candlesticks, look at the sizes of the candlesticks, very small bodies, shadows. And this is what you usually anticipate before high impact news releases, whereby the markets will also want to wait for the news release to come out so that investors make their own sound decision on where the markets could be headed to. Looking at the United States 30, very similar instance can be seen, whereby ever since Asian session did open, the market has been printing side by side, very small bodies of candlestick, but on the other hand, we do have longer shadows. And once again, this is what is seen. Looking at the Russell, similar instance could be seen. Now, looking at the FTSE, also something could be seen similar. The markets are fractal, meaning they do repeat themselves over and over and over again. Now, looking at Brent oil, ever since yesterday, we have entered also into a period of consolidation, whereby I would want to look at this region, how prices are going to react either to the upper side or to the downside as time moves on. Looking at Western Texas oil, similar instance. So before news releases, especially before high impact news releases, we usually see the markets tend to behave in this sort of manner. And it's good because the markets usually move in three phases, whereby we have higher highs, higher lows, higher highs, higher lows. We do have the markets trending to the downside, lower lows, lower highs, lower lows, lower highs, and so on. Now, whenever you see a market consolidating or ranging, this is really good because it means the market is either preparing to break to the upper side or to the lower side. So if you see the markets print side by side, it's gearing up for something. For us traders in this particular day, once again, the first Friday of each and every month, the markets, we are anticipating non-farm payroll, which is usually a high impact release. Now, the earlierness of the release makes it very important for investors to gauge where the markets are headed to. Now, I have a lot of currencies on my end. I would want you to engage with me. What are some of the assets that you would want me to be analyzing in the markets in the near future? Put it in the chat box and I shall be glad to answer. Let's switch over to IG. Let's see if we do have any inquiries currently at the moment. Mwende Mwe, thank you for being the first one to join in. Should I be trading on a live account or demo to qualify for the prize? For the promotions that we are currently looking at, you have to be trading on a live account, okay? What's your view? That's a good question, CS Milia. Celius Miller 730. That's a good question. Once again, we don't know. No one knows absolutely what's going to happen in the markets. We only react to prices. Okay, we only react to information as it comes. We don't push the markets necessarily for us as traders. We only, once again, do react. Wait for the data. As I mentioned, there are three ways you can execute news releases. You can trade before the news release, you can trade during the news release, and you can trade after the release. So once again, everything works. It just depends on you as a person how you apply that piece of information. Hello, Christina. Hello, Babu Glock. VP. News today, XAUSD, sell or buy. What's your prediction? Not from HFM as a company, but you personally. Now, once again, I'll be waiting also for the information to come out. As it comes out, I'll be making my decisions on the fly. You see, sometimes as a trader, you can be looking at long opportunities, but it reaches a particular point whereby something happens, then you need to have the capability of switching your bias, okay? It's very important. It's very important. Sometimes it can be tricky because if you have been buying from Monday, let's say to Thursday, it's very difficult for you to sell on Friday. Or let's say if you have been selling for quite a few trades prior to that, but you need to have the capability of looking at information as it unfolds and you make the right decisions. Okay, so for me personally, I'll wait for the data. I want to look at how the information is going to come out first. For some people, they are going to trade before, as mentioned, and everything works. Everything works as a trader. You just have to find what works for you. Maybe what works for me cannot work for you. What is consolidation? Consolidation is whereby prices are basically printing side by side. So whereby you have prices in just this sort of manner. It's neither making clear high highs, it's neither making clear lower lows. So looking at US 30, let me just give this example currently at the moment. Let me go down to a 5-minute time frame. So this is basically consolidation. You can see how prices are neither making clear higher highs or higher lows. This one here. It's just playing around this region. So this is what you call consolidation. What's your anticipation for NFP? Once again, there's only one way to find out. That's going to be it for me. Take care of yourselves. We shall meet at the Nairobi garage. If you're not going to be available for the meetup, risk management today is going to be very crucial. Remember, the main goal of a trader is capital preservation. At the end of the day, the most important thing for you is not what you know, it's always to have an account. Always ensure that at the end of the day, there's always something that you can wake up to tomorrow. Risk management is going to ensure you survive. Once again, risk management today is going to be priority number one. Ensure that you're going to survive whatever is going to happen. It's going to be wild. Take care of yourselves. Remember, may God protect you. May your enemies respect you. May death neglect you and your family. I shall see you in Monday's morning live market call. But if we are going to meet at the Nairobi garage, see you then. Take care of yourselves.